Welcome, ladies and gentlemen, to Token Tank, where every episode of Token Tank, we invite a promising blockchain and crypto company onto our show to pitch our panel of judges. Now, our judges are focused solely on asking great questions to project founders so that our viewers will be able to make their own judgment calls. Our judges for today's episode include Mr. Kyle K-Dub, the founder and reporter at Crypto Zombie, Mr. Lark Davis, the founder and reporter at Crypto Lark, Bradley Loring, the founder and reporter at Blockchain Brad, and myself, Julian, partner over at Game Theory Group and reporter at the Blockchain Brief. Now, on today's episode of Token Tank, we have Max Wang, the CMO of BGOGO. BGOGO is a cryptocurrency exchange of the community, by the community, for the community. Now, Max, it is an absolute pleasure to have you here today.
Thank you for having me.
So Max, let's kick things off here. Would you mind giving us the elevator pitch on BGOGO?
Absolutely. So hi, everybody. I'm Max. I'm the CMO of BGOGO Exchange. So we are a cryptocurrency exchange. You know, our slogan is the exchange of the community, by the community, for the community. It sounds all fancy, but just to break it down, right? Okay, so in today's cryptocurrency exchange scenes, we see a lot of monopoly exchanges, and you know, as everyone here probably already know that exchanges charge really hefty fees to list their tokens. For example, you know, some exchanges charge like $5 million flat, or even 1% of the total tokens. Imagine if you are a public blockchain and it's mineable over the period of 10 years, 1% is like $50 million. This is insane. And another thing is that, you know, while they're still providing services, a lot of exchanges are still getting hacked. They're still charging fees, and this is something that we, as the kind of like a new generation of crypto exchanges, we kind of want to solve these problems. So by doing this, we have two concepts. One is 21 supernodes. So supernodes have the listing authority of the coins on exchange. The other thing is called the 105% rebate. So pretty much every time you trade on BGOGO, you will get 105% of the tokens rebated back to you in only 30 minutes after the trade. So yeah, we hope to go through those two concepts, you know, during the interview, and to explain it to all our users, like why we're different from the existing competitors, and why we hope that, you know, by making an example, we want to set the set the whole exchange landscape at a right direction. We want to give the power back to our communities.
Nice. It's certainly a good pitch. I know that a lot of exchanges have really struggled to meet customer service demands. Tickets go unanswered for days or weeks on end. How are you going to improve on the customer experience at BGOGO?
So this really boggles down our customer service, right? So for example, let's say we are working on KYC right now, and you guys probably already experienced that. You know, most KYCs on exchanges takes 1 week or 2 weeks, and on our platform we can finish this in 24 to 48 hours, like probably within 24 hours. And this is something that we want to provide a top tier user experience to our users. And yeah, I mean, it's hard to. I would rather we actually act this out and have people to try our exchanges to experience for themselves.
Awesome. So one of the things that I noticed is that, so you guys are saying that you're going to essentially cater to the people. You say that you're going to be able to, essentially give back, as your motto does basically say. Mm-hmm. So can you just kind of explain this? How will this be beneficial for the average user of BGOGO?
Oh, for average, okay, so I'm going to break it down for the average users into two groups. One is project teams, and one is just like retail investors. So for example, I'm a project team right now, and what's going to happen is that usually I raise $20 million, and $10 million goes to the exchange. And my community is going to blame me for not being able to ship quality projects because, I don't even have enough money to hire engineers. So what we are doing is that instead of having the project teams pay for a fee to get listed, we have the concept of supernodes. So 21 supernodes. Every quarter, one supernode can nominate a project to get listed on BGOGO. And there's a catch for supernodes. So every time they nominate a coin, we are going to go to the project team. We're going to ask them, hey, do you guys, want this supernode to list you? So what's going to happen is that if your project is really, really popular and really, really high quality, 5 or 6 supernodes are going to compete over you, right? So there, it gives the supernode an incentive to basically, kind of like either help you, provide resources to you so that you as the project team can eventually pick them. Because as a supernode, there's a lot of good benefits. For example, aside from being able to nominate a coin, get listed every quarter, you also get 20% of the trade commissions from that coin, and that 20% is lifetime. So for example, in the next 10 years, you no longer want to be a supernode. That is totally fine. The coin you nominated in the previous quarter, we're still gonna keep paying you the 20% trading fees. Like, this is totally lifetime. So for the second category, for retail investors, what we want to provide and attract, because we understand that, for example, big exchanges like Binance and Huobi, they provide really, really good variety of coins. They provide really good customer services and stuff. And even, the new generation of exchanges like Fcoin, so they were providing, kind of like a cashback kind of mechanism over 24 hours, right? So what we are trying to provide is that within 30 minutes, we will be rebating 105% of all the trading fees that you spend on BGOGO.com, which means that every 30 minutes you're actively arbitraging like 5%. But there's also a catch. You're basically betting on the fact that BGG token doesn't drop the price within the next 30 minutes, as well as it doesn't go up less than 5%. But in worst case, if BGG price drops in the next 30 minutes, you actively basically pay a fee. It's exactly the same as what you do with the other exchanges. But on the average case, we are going to rebate to 105%. So that gives an incentive to retail investors to be able to kind of just start trading on the exchange. In the near future, we're going to release more and more videos, tutorials to help people kind of how do you trade to get the maximum amount of tokens rebated. So it's kind of we want the experience to be very joyful and playful and also professional.
I see. Well, Max, thank you very much for your time. We do appreciate that you've come on to the Token Tank, but I want to get a little bit more serious about your supernodes because there's a lot involved in what you plan to do. One of the key things I'd like to know is exactly how you become a supernode. Now, you've mentioned you have 21. What is this criteria specifically for becoming onboarding onto your system as a supernode?
So, okay, so the supernode tenure is 90 days. So actually 1 quarter. So about 90 days. So every single 90 days, for example, the second quarter, we're gonna rank the BGG token holding positions, and the top 21 automatically become the new batch of supernodes. So the founding generation of supernodes is handpicked by BGOGO, our team. So it's only for very well-known VCs, influencers, and we're in the near future we want to bring in a lot of public chain foundations. So yeah, these are kind of like the criteria to become a supernode. It's pretty much that simple. You just have the top 21 token holdings, but you also have to pass our KYCs.
I see. Just on that note, though, with regard to the supernode, I want to ask you a few things about that. Now, you mentioned that VCs are involved. What are the inherent risks in that? Obviously, VCs have their own interests. You also have a one vote, one listing policy. Can you talk us through what that will mean for supernodes, and what are the inherent risks, once again, with regard to potentials for manipulation, for top-down control?
So one vote, one listing is basically, like I mentioned before, every single quarter, one supernode can nominate one coin to get listed. So what we are going to do is, they nominate the coin. We reach out to the project team. We talk to them and be like, hey, do you want this supernode to list you? And of course, we do some like vetting on the project to make sure that it's not a Ponzi scheme or a scam or something, right? So after that, we list the coin onto our exchange, no questions asked, and 20% of the fees goes to the trading fees goes to the supernode directly in Ether and Bitcoin. What are the risks? That's a very good question. So what we're going to do, BGOGO, is that we're going to be the first crypto exchange in history to list transparently every single supernode's top holdings. And actually, we're going to probably list the top 25 or even top 30 token holdings like on our webpage. So basically what you can see is the daily changes of every single supernode. What is their name? Which venture is this? How many BGOGO tokens they have? So by that way, you can imagine that we're basically forcing people to dance naked on a stage. If you want to pump and dump, if you want to, just like sell tokens, feel free, but everyone will be able to see this on any internet. And this is something that, we want to make an example of ourselves as well. So we're going to list our team the holdings as well. So basically to show that here are the supernodes. These are the ones that we entrust them the power to nominate coins, nominate high quality projects, and these are the BGG token holdings. So if they decided to exit, scam, or dump on retail investors, like every single one will be able to see it.
Got it. So Max, it seems like there's a very, very clear incentive for supernodes to obviously hold BGOGO tokens. But can you kind of explain to me why a retail investor, apart from say the 105% kickback on the transaction fees, like what are some of the other mechanisms that you are thinking about to keep those retail investors to hold BGOGO tokens as opposed to simply making a transaction, doing some sort of wash trading and selling it back onto the platform?
Right. So a lot of exchange tokens right now. So for example, if you trade and get free airdrops, like if this is me personally, I would just sell it instantly. So what for BGG is something that we plan. We've been thinking about this for a long time, and we actually, even previously made a company out of this. Is the concept of decentralized VC. So like I said, we want to give the power back to the community. We don't want to have VCs have really good money and lots of money and get really good private deals and dump the coins onto the exchange, onto the public. So what we're doing is something called kind of like an ICO investment platform. We're going to do Genesis mining for every single ICOs that we do, or like most ICOs we do. So for example, you have a new projects, right? So for example, the project is really, really hyped and it's gonna get listed on BGOGO, and the public sale already sold out everywhere. So what we are gonna do is we are gonna provide a chunk of allocations. We're gonna buy that allocations for our users. Like for example, 1,000 Ether worth of allocations for that project. And all BGG traders are able to get the tokens for that project through trading. So this is the concept of mining through trading, right? So what's happening is that you keep trading, and instead of getting in BGG token in return, you get the token for that particular projects. We're going to have those like monthly events like in next few months. So in terms of BGG token itself, what it corresponds is the allocation that you're able to get. Like for example, if I have 5 tokens, then you have 5 BGG tokens, then you have 10 BGG tokens. So the amount of allocations that you're able to mine from that project will be doubled compared to mine.
Mm-hmm. Interesting. I'm very curious how you plan on stopping or mitigating or perhaps even punishing for corruption, because when I look at this model, I look and think, why wouldn't the projects approach the supernodes, pay them massive bribes in order to be the selected project of that supernode? And why wouldn't they approach 6 or 7 or 8 supernodes and bribe everybody in order to be listed? How are you going to prevent that from happening? And if it does happen, what will be the repercussions of it?
So that's a very good question. The first of all is that we want to do a betting on the project ourselves. If this is a scam coin or it turns out to be a scam coin, we have the final say to actually delist the coin, because at the end of the day we're still a centralized cryptocurrency exchange right now, and we are also gonna basically dethrone the supernode because they didn't do enough vetting. We entrust the supernodes to do more than just nominating a coin, right? We entrust the supernodes to do the vetting of the projects, help the project grow, and help them succeed in the long run. So to answer your question, yeah, we're going to delist the coin if it turns out to be poorly. Another thing that we were going to do is at the end of the quarter, we're going to show the performance of all the 21 coins that was listed in this quarter, and we will see the price action merge those 21 coins into one graph. And you guys, everyone will be able to see what is the best performing coin that was nominated, or who nominated that coin. Mm-hmm. So if you can imagine, if you are a supernode and you keep shilling shitcoins, and after a couple months, you can pretty much see the price action is pump and dump. And people will start to lose confidence in you. So frankly, what we are trying to enforce is really that we are forcing the supernodes to put their branding on the stake. Every retail investor is looking up to you to make the right decision.
Max, are other traders transactions also published, or is it purely the supernodes, right? Because in the situation that you bring up there, couldn't technically a supernode just transfer the tokens out to another account where then that account is not tracked, or are all the trades public?
We only track that particular one account. So if you want to stake the BGG token, you have to put all the BGG tokens in one account.
Got it. Definitely appreciate the transparency on that. That's a really, really awesome feature that you have, Max. But one of the things that kind of concerns me is, let's say hypothetically a supernode doesn't get reelected, right? But they're holding all of this accumulated tokens. So what happens then? Is there a way to safely release those tokens onto the exchange so that we're not in fear of these not reelected nodes just dumping their whole stash?
Yes, this is definitely a risk, to be honest. So what's going to happen is that, okay, so for every generation of supernodes, starting the second generation of supernodes, all the supernode tokens are locked during that quarter. All the supernode the tokens are locked. They can only sell this after the unlocking at the end of the quarter. But for the founding generation of supernodes, so we still need a little bit, kind of like a bootstrapping liquidity in the very early stage of the system. So what we're going to do is that we're going to unlock 50% of the BGG tokens from the supernodes, like on day one, and the other 50% will be vested over a period of 5 months and 10% each month. So I would say, from the second, third generations, these things only happens when around, kind of like at the end of tenure, and people will kind of like, start dumping the coins. But don't worry, like the least thing we want to see is that people dumping on, the public. What we are going to do is we're going to communicate very closely with our supernodes to make sure that, hey, do you guys, you guys holdings are kind of low right now. Like, do you want to, buy more, or do you want to give up supernode kind of like a status? If this is, we can always do some over-the-counter trading and buy them back, like ourselves.
Mm-hmm. Kind of piggybacking on that real quick. One more question, and then I'll let somebody else kind of take the reins. So, like, what happens after the 48 months of distribution is completely done and the mining pool is depleted? I mean, doesn't that essentially wasn't that the incentive to hold? So, what do we do then? Is that it, or is there more of a?
That's a very good question. Actually, I've been asking our founder the first time I saw her. So here's the thing: 48. I'm gonna be very realistic here. 48 months is a long time. 48 months is a long time in crypto. We're not gonna know what's gonna happen in 48 months. But what I can tell you is that we're going to keep adapting to all the like all the mechanisms, with the newer and newer generations of exchanges, and yes, under the current settings, and after 48 months, because you no longer have the mining mechanisms, and the only token utility right now is basically being able to corresponds to the allocation for ICO investment platforms, right? But like I said, 48 months is a very long time. What we're going to do is keep coming up new incentives for users to be able to use the BGG tokens to trade in our entire exchange platform.
I see. And Max, I wanted to ask you also a bit more on the 20% that you're also you're affording to those who do function as a supernode with regard to subsequent projects that they onboard. So can you talk us through this with regard to the risks, the inherent ones, once again, with regard to that top-down, almost Ponzi-like structure? And I want to talk specifically about Ponzi because I want to be really clear in how you eliminate that specifically from the equation of BGOGO, because the reason I ask is that if we are aware that you're also providing 20% provisions for these supernodes as they onboard these, what's to say, firstly, that they aren't going to try and also sync with other VCs? What's to say they aren't going to reinforce more of this top-down, position so that they can more so extend their dominance in the market rather than allow for people in the marketplace, who aren't privileged to enact and utilize BGOGO?
So you're asking like how? Can you repeat that question one
more
time?
So I'm asking you specifically, like you're going to be giving 20% essentially allocations offered for any projects that are on board for the supernodes.
By allocations, you mean the trading fees?
Yeah, the trading fees. So
okay.
That inherently what you're doing is you're providing for an incentive specifically for the supernode, very directly as a privileged position.
Yes.
So the reason why I ask you this is because they benefit financially from the agreement and from the arrangement as a supernode. So how can you ensure that by having that design that it's not going to reinforce more of the injustice, to widen the gap rather than close the gap with regard to once again this hierarchy? Because quite simply we see it so much right now in that once you afford the privileged VCs and those at the top more access, they can potentially utilize that to their benefit.
So two things. The first is that we always wanted to do vetting and KYCs on our supernodes to make sure that they are the brand that people trust. And in the near future we can even kind of like have the community to kind of like vote for supernodes. Like this is also another thing that we are thinking about. The second thing is you're talking about opening the gap between the retail investors and the supernodes. And so I was gonna release this like maybe probably in the next few weeks. So we are already having supernodes coming to us and basically say that, hey, I am a supernode of BGOGO, but I also wanted to nominate this coin. But that coin, I have the allocations to this. So what we are gonna do, we basically worked out the deal. So they are willing to give up their entire private sale allocation to give the allocation to BGOGO so that we can use that allocation for public sale to users. So in a way that we want to make this a story of PR to show the world that there are good institutions that is willing to give up their short-term gains for a long-term value investment in a project, because according to their words, they're already getting the 20% through the trading fees. If they spend that money and time to help the project grow and succeed, there will be more, token holders, right? And in turn, they're getting the 20% fee already. They don't really need to invest, in short term. So this is something that I think it's a very good to set a very good example to the ecosystem that hey, there are good institutes that is willing to give up their entire allocation to help the community to run their ICO.
I see, and thank you once again for being so transparent as K-Dub mentioned. Now, I want to talk about your token itself. Could you clarify in a nutshell what specifically is the utility and purpose of your token, and why do you actually need one?
So the token right now is basically for the stake of the status. So for supernodes is the stake of status, right? So you can imagine as the traffic grows, there will be more and more value in the token. And in order to keep a supernodes, like you said, there's a lot of huge good incentives to become a supernodes. People are gonna have to basically keep their BGG holding positions, right? That's the first thing. The second thing is, for our trading. So for our retail investors, we give 105% rebate every 30 minutes. And that 5% you can either sell it or hold it as kind of like an investment. The third part is basically like I mentioned before, it is related to your allocations to the future ICOs that is going to be run on the BGG exchange.
Mm-hmm. And just one more question with regard to the 105% rebate that you're offering for those users. Now, how are you going to sustain that? Obviously, that's a very generous offer, but we need to know that you can sustain this in the long term.
Yeah, and also just to quickly add to what Brad just brought up, so with the 105% rebate plus also the 20% that you're giving to the supernodes, like how does BGOGO actually sustain?
Okay,
right.
So to the first question, that 105% is not unlimited. We have a, because it's called mining via trading, right? So every day you have a daily cap of how many BGOGO tokens, BGG tokens can be mined. So that is in basically in the smart contract, right? So every time you mine, you have this amount of BGG, and let's say today everyone mined all the BGG tokens, and then after that, if you keep trading, no one gets the rebate anymore. Does that make sense? So that's the first thing. So there is the daily cap for the entire BGG token. The second is there's also a daily cap for each person. So every person is eligible for trading up to $1 million worth of cryptocurrencies in order to get the rebate. I think $1 million is pretty much enough for retail investors on a daily basis. And our trading fee is, I can break this down for you. So the trading fee is 0.01%, so 1,000. So that means that the maximum trading fee that you are going to be able to spend is $1,000 every day. So from that $1,000, you get 105%. So which means that in maximum you can get $50 for free, like just trading on BGG like every day. So that's the number. The second part, to answer Julian's question, yes, we are not making any money. So what's going to happen is that everybody trade on BGG exchange. They pay the trading fees, right? So the trading fees is in Ether and Bitcoin. What we do is the 20% goes to the supernode. The 20% for that token goes to the supernode. And we use the rest 80% for daily buyback of the BGG tokens. And when we buy back, we also burn the tokens like every day. And we're gonna basically show this in a address that everybody can see. And if you think about this equation, yes, there's no cash flow or anything in our system, which means that we are not literally making any money, and that is totally fine. The first thing is that.
But aren't you making negative dollars through this model?
Not really, because every day there's newly released BGG for mining, right?
Got it.
So yes, so we want to run kind of like an early internet company kind of like a model. So in the early stage, we don't want to make profits. Like there's exchanges, their tokens went up 100x in a month. Like we don't want this. Like it's not sustainable in the long run. So what we want to do is in the very early stage, we basically give away money. We give people the incentives, and we want to build a brand, a loyal user base, and I think this is much more valuable than just like cash flows. So if you think about how do we make money? Our money is the value of the BGG token is our money, right? As the trading volume goes increases and there's more and more people using the platform and using the platform to trade, to invest in ICOs, the demand for BGG tokens goes up, and that's basically our money. And yeah, so and we're even gonna announce the token, the team token addresses, and see to show the world that, you know, are we gonna, you know, dump it on the public right now, right? So the company has a lot of cash in the bank account, so the daily operations and stuff, like, we're not really worried about. But by doing this, one of the reasons is that, you know, hey, I was talking to the founder, I was like, hey, we are pretty well off, so why are we doing this? And she said, you know, there's an opportunity out there, and there is so many monopoly exchanges charging hefty fees, and we really want to do something right. Like I always like to say, you know, I don't know if BGOGO will be the final answer, but I want to make a step at the right direction to show that, you know, this is what cryptocurrency exchange is supposed to be.
I want to move the conversation a little bit towards the direction of security, because cryptocurrency exchanges are big targets for hacker groups. We've seen, for example, basically every exchange has had a hack at some point. So what are the security measures that you're going to be putting in place to secure user funds? And in the event that a hack does happen, what are you going to do? Are you going to be compensating users whose wallets were compromised? We see, for example, Binance has recently introduced the Seifu fund to have that backup in order to protect users in the event of a hack event. So what is your approach going to be?
So, okay, so the first question is for the security part. So what I can tell, you know, instead of just telling the detailed implementation, is that our we have a really strong engineering team. So the entire engineering team is from Facebook and Twitter. So yeah, I truly believe in, you know, those engineers to be able to carry out the security part. And the second, to answer your, you know, what happens with the hacking thing. So one of the reasons I have been postponing our marketing strategy is because I want to focus on the product itself. And we are actually running a lot of stress tests right now to make sure that, you know, the fund is safe. And in the case of a hack, we're most likely that we're just gonna compensate all the money back to the users. Depending on the cases, like you know, in the best case, nothing happens. But at the end of the day, we want to make sure that our community don't get hurt.
Yeah, absolutely. There's a lot of opportunities for that, and we've definitely seen, you know, hackers, that's their job. So obviously each, you know, individual situation will have to be dealt with accordingly. So I trust you on that. I wanted to talk a little bit just kind of practically, if you guys don't mind, just kind of on the surface for everybody. I just want to know essentially when are you guys going to start trading your BGG? You know, when is KYC going to open? When is this thing going to really get rolling?
So the KYC testing right now is internal testing, like today and tomorrow, and we'll probably start opening the KYC next week. So that, like I said, we really want to make sure the product goes right. Hacker is really the least, probably the secondary problems we are worrying about now, because, you know, if you take a look, all the new exchanges coming out recently, you know, there are exchanges basically airdropping Bitcoins, and people can withdraw their Bitcoins like you know, day one on exchange, or their Genesis mining totally just, like, you know, broke the website. And this is something, the least thing I want to see. And so this week we are focusing on the product. Next week we're probably going to start the KYC, and I'm totally okay to postponing the BGG token release probably in middle August or even late August, as long as, you know, we know for sure it is safe to announce that. And during that period of time, we're going to, you know, announce weekly updates on the project and what we shipped, what we did, who are the partnerships, to keep our community transparent.
Can I just add a little point in on the KYC? I wanted to ask, are there any nationalities that are going to be excluded from using your exchange?
Yes, none US, none China.
I see, that makes sense. So, sorry, you can go ahead, Julian.
So Max, We're seeing a lot of these negative transaction exchange models start to pop up, right? I'm just curious to get your take on how do you think about the competitive landscape? Because I think a lot of the chatter that's coming out now around these exchanges is, people look at them as very, very short-lived and then just kind of moving on to the next one, right? So, would love your perspective around competition.
I would say, aside from the first generations like, Huobi Binance and OKEX, the second generation, starting Fcoin and other, CoinSuper, CoinPark, I see in the second generation of exchanges, there's generally two models. One is the dividend model. The second is the buyback model. So the dividend model to me is really hard to sustain. What you're doing is basically you're rewarding your current token users with the dividends from the investment of the newer investors. So you can just see from the picture that it's probably not going to sustain in the long run. Like what if you reach a plateau, the number of users, like there's no users joining the exchange, like who's going to pay out for the dividend? And that is why we didn't use the dividend model, and we're focusing on the buyback model. So basically, instead of giving dividends to our users, we will use the trading fees to buy back our tokens to have kind of like a buying pressure to the token itself.
And just on that note, Max, I wanted to ask you with regard to that buyback, is there any sort of mechanism in place where you have a fund? You mentioned you're going to burn the majority of these tokens, yes, but is there some sort of store system? And also, I just wanted to also ask you with regard to, your references to Fcoin, that sort of thing. Can you talk us through a little bit more about, again, your differences between Fcoin? Because a lot of people are suggesting that, once again, these designs are already problematic because they already allude to almost like a top-down system.
Right. So for the first question is how are we going to store the token, right? So what we are going to do is basically send it to a burn address, and that burn address is going to be public, right? So a daily buyback, we are going to buy back at not a very specific time, but we basically buy back the 80, aside from the 20%, all the 80% of the trading fees, we're going to use this to buy back our BGG tokens, and we're going to send it to a burn address, so everyone can see that there's amount of BGG tokens sending to that burn address every day. The second is, in general, I don't want to compare it to a very specific exchange, but Fcoin, since it's kind of like a first mover advantage, right, exchange in the second generation exchange landscape. Yeah, they're doing a dividend model, right? And everyone can see the FT token price went up like 160x in a month and start dropping. And I can see there's a lot of so there's two major problems I see in this model. The first is it's not sustainable. It's really not sustainable. And I think, especially in China, everyone are already getting familiar with the so-called concept of mining via trading, and people are kind of like are used to it. And yeah, in general, like you said, it's pretty much like a Ponzi. The second problem is what I see for Fcoin is that they only did the marketing within China. Like pretty much, I didn't know Fcoin until probably like last month, but it already ran for a couple months already. So here's what. So that is why in the system of BGG, we don't just want to open to a small kind of like area of the users, and that's why we bring in U.S. funds like Pantera, Russian like influencers like ICO drops. We want them to be our super nodes, and it's kind of like a mutual how to say that, like a mutual governance model to the entire ecosystem, instead of just having one monopoly exchange doing whatever they want with the price action. Yeah.
Well, Max, the reason why I ask is because you alluded to your more egalitarian sort of premise before. You want to do something that's really going to be a game changer for the industry. But I want to get clear on how you're not a charity. Because you mentioned that in an initial phase, you're not going to be really creating a lot of revenue. You're not going to be, because of the model you're putting forward. That will have to change for you to be sustainable. Yeah. So what is the plan in the future to move away from that 105% model?
So in the very short term, what we were going to do is to do a labs kind of like a model. So basically, we're going to open a labs to incubate a bunch of projects, both from the investment point of view, also incubation point of view. So it's very similar to how Binance runs the Binance Labs. So yeah, these are one sort of like revenue we were thinking right now, but all the other stuff, like I said, the crypto space moves really fast. In the short term, at least think about Amazon. Amazon didn't make a profit in the first 7 years of their business, and 7 years in crypto is like, I don't know, like a lifetime. So
for sure.
Isn't Amazon technically breaking even still today? Like technically?
Yeah.
So. No, I think they've crossed the profitable threshold. I'm pretty sure.
Yeah, they raised their Prime membership from 95 to 115, right? So one line of code is 2 billion revenue.
Hey, so Max, we're running out of time here, but just really quickly, would you mind recapping for us the super nodes that are participating in BGOGO?
Like the names of them?
Yes, that would be fantastic.
Okay, so right now we have Pantera on the US side. I just came back from Google Venture. So we're talking with them right now, and also consensus is in progress. So on the influencer side, there's ICO drops. Chinese side, there's DHVC, Node Capital, Pre-Angel, Block VC. So these on the Korea side, Blockwater, Hashed. These are the top names off my head.
Got it. Well, fantastic stuff. Max, it's been an absolute pleasure having you here today. And then again, thank you to all of our incredible judges. So audience, it is now up to you to decide about whether or not BGOGO is going to be a whale of a project, or will they sink like a guppy? Please comment below and tune in next time for the next episode of Token Tank.